Nobody expected this to happen. Retail sales keep rising as consumers keep spending. The Commerce Department said retail sales, a measure of how much consumers spent on a number of everyday goods, including cars, food, and gasoline, have rose in November. And that is above both the decline projected by Refinitiv economists and the revised percentage drop recorded in October. And excluding the more volatile measurements of gasoline and auto sales continuing to climb last month. And when you take into consideration that the November advance is not adjusted for inflation, this means that consumers may be spending the same but getting less bang for their buck, which isn't good. And the managing director of trading and investing at E-Trade from Morgan Stanley, Chris Larkin, said, "The risk going forward is that too much economic heat could reignite inflation and put the Fed back into a defensive posture. And consumers maintain their seemingly reckless spending habits in various sectors such as automobile dealerships, health and personal care outlets, as well as restaurants and bars, indicating ongoing discretionary expenditure. Grocery stores took a huge chunk, obviously, because food is so damn expensive. And additionally, their inclination towards online shopping persisted, as evidenced by a steady increase in spending at non-store retailers compared to the previous months continued to climb. Sales rose in 8 of the 13 retail categories last month, and that just continues to tell me that consumers are swiping their credit cards and pushing their limits to the max. More and more Americans are relying on their credit cards to cover necessities, which is going to come back and bite them real soon. Right in the butt. And credit card debt surged to a new record in the third quarter while delinquencies are also on the rise. And so basically, consumers continue to spend. The rate hasn't really decelerated and it's moving forward. Now, I anticipate that factors like cost fatigue, increasing debt servicing obligations, and more restrictive credit conditions will negatively impact spending in the first half of 2024. And more people will be going broke and bankrupt and defaulting, and delinquency, eviction, repossession, etc. will be on the uptick, which is not going to be good for the overall health of the economy. As experts warn, U.S. real estate market is going to experience a great correction, and so many people have been waiting for the crash. Now, what's coming is going to be the greatest wealth transfer in modern day history. Now, make sure that you are prepared. Click the link down below in the description and be ready to protect your personal finances, digital identity, and savings and investments, because what's happening next will be the greatest equalizer that will not only wipe out the folks who aren't ready and prepared, but will also multiply exponentially the personal finance and net worth positions of those who are. And if you have any questions, feel free, reach out. My info is below. Because it's already gotten bad, y'all, but it's about to get a whole lot worse. Here, I want you guys to take a look at this.
Well, real estate struggles are real. Home buyers and sellers alike feeling a massive struggle to close deals or make money. And if you need yet another sign of turmoil, 45% of U.S. real estate agents are struggling to pay rent on their offices. Here to react is private equity fund manager and real estate investor Grant Cardone. Welcome, Grant. So tell me, why are real estate owners and agents not able to pay the rent? What is going on?
Well, because, Rachel, the Fed single-handedly has killed the housing market. The Fed will make more renters in this country in the next 2 years than it has in the last 50, because mortgage applications are at all-time lows. Mortgages are double what rent is today. And it doesn't surprise me that real estate agents are feeling the brunt of this. Back in June of 22, Jerome Powell said that the middle class, everyday people, would disproportionately feel the pain of higher interest rates in his attempt to control inflation. He has not controlled inflation. He has failed miserably. What he has actually done is create it and, in the meantime, stop the housing industry.
What would you recommend he do?
Well, what he should do is get out of the way. There's no time in history in my lifetime that the Fed actually controlled interest rates. Supply and demand is what controls interest rates. As long as people are spending their money, that means they want that product or service. At what point it gets to a price where I no longer find it valuable, I will no longer continue to purchase that. And people want homes. People want to live in a single family home. I don't personally think it's a great investment. I've said that many, many times. I've gotten ragged out on it, but he should step aside, get out of the way, let the market do its thing. Interest rates will have to come down in order for pricing to come down.
That's right.
This is actually a contradiction to what most people think, but when interest rates come down, mortgage applications will go up, and people will start selling their homes.
Well, the World Economic Forum had this famous commercial where they talked about the Great Reset, and they said, you will own nothing and you will be happy. And you're seeing that happening. You're saying that we are becoming a renter nation. I say it's by design. Explain what you mean by it.
The rents in this country, the average rent, as much as people complain about them, we have 12,000 units. The average rent's about $1,800. And as much as they complain about it, the mortgage on a similar home in that same neighborhood would be double that, plus insurance, and plus a PMI, which is mortgage insurance on the mortgage itself. So it's unaffordable for people to own a home today. And that means you will rent, you will literally own nothing and be happy about it. Now, the apartment complexes that are being built today provide such crazy great amenities that it is actually, for new generations of people, it's actually an alternative that's not economic, but actually desirable for them to actually live someplace for 10 or 24 months at a time rather than hunker down for 30 years.
Yeah. Well, these hedge funds and private equity firms are buying up property and then, making them into rentals. And we're seeing, as you said, less and less people owning their home, which always was the American dream.
And this is.
Go ahead. Last thought.
Yeah, I just want to say that we're entering the greatest real estate correction in my lifetime. It will not include single family homes, but it will include office, which we're already seeing that damage, and we're going to see it across the entire apartment complex. It's going to be a great opportunity for individuals, regular, everyday people, to actually grab trophy real estate from institutions. This has never happened in this country. It's going to be at epic levels.
All right.
So Grant Cardone, not Grant Cardone, private equity fund manager, net worth somewhere in the high billions, has declared that the real estate industry is experiencing the most significant correction he has ever seen. And what he is basically telling everyone is he sees this as a unique opportunity for everyday individuals to acquire premium real estate from institutions, which is a phenomenon not previously seen in the U.S. Cardone highlighted the extraordinary scale of this correction, but also pointed out the current challenges in the housing market. High interest rates and housing costs are creating difficulties for both buyers and sellers. The low housing inventory is further driving up prices, making home ownership increasingly unaffordable. He criticized the Federal Reserve and its chairman, Jerome Powell, for exacerbating the situation through interest rate hikes, which he believes has stifled the housing market and failed to control inflation. Now, Grant Cardone argues that the solution is to lower interest rates, which he believes will revive the housing market by increasing mortgage applications and encouraging sales. And he not only points out how investing in a single-family home is not a wise investment, in his opinion, but also suggests that Powell should step aside and allow the market to self-correct. Meanwhile, the issue of housing affordability extends to the rental market as well. And as we can see here from you all sharing current pricing trends in your areas, which thank you guys for participating in this community post poll. It's very helpful to a lot of people, by the way. So thanks for that. But the numbers don't lie. 89% from those who voted confirm pricing is either going up or staying the same, which is not great news. It's bad news, actually. And a report by Moody's Analytics showed a slight decline in the U.S. rent to income ratio, but the level remains at 30%, the threshold for being considered rent burden. But based on most of the people that I come into contact with, that just isn't true. And it's just another lie propelled and pushed by the government and mainstream media to further promote this normalcy and confirmation bias of struggle and despair throughout the country, which is just a trick to keep folks locked in on the wrong target, focused on being locked down and forever owning nothing. And I can't stress it enough how important it will be for you to all know the latest and what's happening starting in 2024. So I hope that you all are paying close attention and staying smart by getting ready and being prepared. And I hope that you check out the link below in the description so that you have the knowledge, and you guys know how I feel about knowledge. Knowledge is power, and I want you all to be armed and endowed with as much power as possible. And Grant Cardone predicts that the Fed's policies will result in a significant increase in renters over the next 2 years as mortgage applications are at record lows. And with rent prices continuing to climb, this should be the clear indication for all of us to make that switch and position ourselves and our families for financial survival. Stay tuned for more. Feel free to ask questions and reach out if you'd like.
I can tell you my problems, meditating my silence. But I keep pushing my pen, rotating my stylus. Brokenness feeling like sin, now no breath, low dollar. Used to be left on red, now all the girls go holler. Now all the girls go follow. All the fake fans gon' pop.